Welcome back to the channel. I hope you're having a fantastic day wherever you are around this beautiful planet of ours. It's sunny outside, it's warm, blue skies, markets are up, and I couldn't find a better way to begin this particular video after the last several months, few weeks, few days of the analysis coming into play. And I have to thank WD Gann for all of the work he put in over 100 years ago. I need to remain humble and also look at your comments. I love your comments. Can't wait for Jason's gloating video tomorrow. So I'll just leave the gloat till right now. Gloats are over. Markets don't wait for anybody. So even if we are right in our analysis, who knows? Next day, we need to stay alert. So we're only as good as our last trading day. So I hope you guys have been liking the videos, subscribing, and of course, commenting as well. I do enjoy reading all of your comments through here as well, even if I don't get back to everyone. A lot of great comments. And I have to say yet again, in these bear markets, lots of amazing people out there. You wait for the bull markets, there are going to be some absolute nutters who cannot fathom anything but their own cryptocurrency. All right, enough of that right now. Let's get into the pump at the moment on BTC and cryptocurrencies. Now, I want to lay out where we're now looking for this particular pump, if it turns into a FOMO trap, and the particular price levels and pattern that we'll be looking for should we see a trap occur. Essentially, these are just resistance levels that we can determine in the market ahead of time so that we can better prepare for any particular patterns that may come from the market. The FOMO from buyers getting in, thinking they're going to miss out on the potential move to the upside, all those sorts of things. So let's start with Bitcoin. Lots of lines on the charts. Let's go through these bit by bit. I'm going to cover ETH BTC, ADA, the stock markets, and the US dollar, most importantly at this point in time. Now, yesterday's video, this is where we were. We had a little push down, and I was talking about here, crypto charts warning, last chance before smart money destroys Bitcoin bears. Now, it happened rather quickly. I thought maybe we might take another day or two. It happened within 12 hours, but it's a good place for a trade. You can see the market was wanting to break out of these resistance levels to then pump above. And it also got above the short-term downtrend line. And note that when the markets do this, when they come up to these downtrend lines, to break out of them is a good thing, but they need to break out of them on strong volume. Strong volume in comparison to the previous sessions. And you can see last week had reasonably low volume, which now looks like the supply was drying up for the short term. We're staying on the short term here. And because the supply dried up, the FOMO starts to set in. That means we get a big burst out to the upside with more volume because more people rush into the market thinking they're going to miss out, or because we're in a shorter term time frame here, are basically just traders seeing the buy signal and taking that buy signal coming up to the resistance level, and as it breaks out of that resistance on strong volume with a good ranging bar in comparison to what we've seen in the past since basically the 13th, which was a Fed decision day. Some Fed news came out then. This is a good start to the move to the upside. Now, we got to look to the further price targets for the upside for the trap and what we could expect from this point. So I've had this here. You guys have seen it for many, many months, $20,700. That is because we saw much support, and the market basically just slices through this level, meaning that is for me, it's a good line in my analysis. It slices through. If it's not support, meaning it broke down. So then we get a slice through to the upside, back to the downside, and we're now looking like we want to attempt that 20,700 again. So what we need to see is a stepping stair process from Bitcoin, and this will go across to the other markets as well. So basically from here, we need to get above 20,700 and start to consolidate above these levels. The market really hasn't done so much consolidating above 20,700 except for that little rush up in July and August before it quickly came straight back down and then found its ground between 18.5 and 20.5. So that's why this is going to be the key level moving forward if the market can find some ground and start to consolidate rather than just rushing its way up and then straight back down. So the consolidating piece above 20,700, and I would look towards 23,000, being that Wyckoff flip. Bitcoin has broken past the bear market downtrend on the linear scale, but of course on the log, there's a little way to go here. So we've got a couple of levels like we looked at, 20,700 to 23,200. Consolidating in that zone is a good sign. If we only touch those levels and start to break back down again, that's going to be a much weaker sign for Bitcoin. That's the trap that I'm looking out for here for BTC. As for ETH, we had the pump up as well. It's now sitting at around 9%. We've got about half hour to go before the market closes. So by this stage, you guys would have seen the market close when this video goes up. For the whole day, it got to 13.5%. So the range of the bar was 13.5%, $182, which is a fantastic day. I haven't had anything like that since around September 15th. So just over a month ago, since we've seen a bar this big. Also the 21st of September. So yeah, just over a month as well. So 50% level, $1,500. That is the short-term trap level. We got a big price range, big volume, and the close is just easing off coming into the end of the day's trading session. So that could be the trap underneath this 50% level. So moving forward from this for ETH, closes above 1400 and consolidation at this zone before we attempt to break through it. Good signs, very good signs that will come to test that bear market downtrend. So that's what I'm waiting for on ETH. It's going to be another few days to see what happens there. And same sort of deal, looking forward to November, December to give us that macro view. So short-term stuff, above 1400, good signs. Below 1400 again, it basically brings us back into the consolidation zone. So this was a trap. If that happens, we stay above here. It was basically reaccumulation at this zone before we test higher prices on the short term. Now, my target still remains reversal target, Wyckoff flip. It is this bar right here. Big volume. That was the change in trend going from the ETH merge hype into the dump. So that is the key level that I'm looking for. 19th of August, top being 1848. So call it 1850. That's what I'm waiting for this market to break. Bear market downtrend, 1850. Consolidation above this zone, that's going to be a good positive sign for ETH, which would mean that we're now a couple of steps away from the bull market being confirmed and that 880 being the low. I know it's a big call. I know people would be saying it's too early, this, that, the other. Yes, macro, looking for the next couple of months for that. Short term, these are the levels that we have to work with in order to get those next stair steps to that point. So if we get rejected here, back into this zone, weakness, and then we'll probably come back and test this zone again because it failed here. Scoots back into the lower zone, and then we have to come back and test the next zone. And that is pretty big weakness. So let's see whether this turns out to be a trap or confirmed reaccumulation before we test higher prices. ETH BTC also looking pretty good. Macro close above 0.076, so 7.6% of a BTC value. That would be the goal here. So that's the 50%. You can see 75579, round number, 7.6%. ETH to get back above that level there would then also mean that it's back above a bear market downtrend, and that would then start to confirm ETH as being a stronger play than BTC. That's what I'm using this chart here for ETH Bitcoin. And should it get there, good signs for ETH moving forward into that Q4 of 2022. As for ADA, and this is the only crypto I'll look at in this video, but I'll do some other cryptos coming up. Basically, we had the final capitulation zone here, 17 cents to 33 cents. We hit, where do we hit? Dead on 33 cents so far. I'm looking further down unless ADA can get back above these previous support zones, and that is at around 40, 41 cents, and consolidate above those levels, and then look to take out the logarithmic bear market downtrend. You see I've got it on log here, on linear, took it out a little while ago, and then bounced off it as support. So 33 could be the low, but we need to wait and see whether we get some confirmation of consolidating above 41 cents and then breaking these previous levels of 51 cents. That's the 50% level. So 51 cents, which is also a nice high here at 52. And then of course that previous top that came in May, which was at 69 cents. So 50 and 70 cents are the key levels for ADA to start to climb above in order for ADA to then start to flip bullish, start to check off that list on the macro side of things for ADA to get from bearish to bullish. 50 cents, 70 cents, Let's look forward to those currently at 40 cents. Decent move overnight from the US dollar falling even further. You guys would have noted from my channel here with a lot of these titles looking at the collapse of the US dollar. So just a couple of days ago, actually, the US dollar started to fall. People were saying it's a bit early. Yes, I understand it can be a bit early, but we had some key signals here using our TIA Gann swing indicator. There's a link to this in the video description if you want to use it. I use this on all of my charts, which you would see. It's this swing indicator here to let me know where there are key macro turning points and micro as well. And because it started to turn, we got the swing indication here that the market had broken down. That is a good sign that we're going to see lower prices. It also broke the 50% level. And of course, this has flowed through into the rest of the market. Weakness on the USD. People start to get a little bit more excited. Let's start to pump up the stock markets. And so now we are down at 110.7. Members of ours, TIA Premium members, would know how they use this tool to project profit targets. And now we got our double top here. Generally, the double top would come down to about 150, which is right here, to 200%. So that gives us a good indication that on the short term, because we're trading dailies here, that we will potentially see a reversal at around 110.7 or somewhere around 109.7. So this is around the zone that we would look for an hourly, 4-hourly, daily sort of reversal to come up and test lower prices again, to see if we get a lower swing top before further down, or we break above those levels. And this was all just a bit of profit taking before the market can move higher, in which case, if the US dollar gets strong again, then of course, stocks, Bitcoin, cryptos will probably start to ease off until you start to see a little bit more weakness on the USD. So this could all be part of a bigger picture consolidation and reaccumulation before it pushes higher. But I remain with the position I've talked about here with the USD, that I think this is the beginning of the end for the strength of the USD. This will take months. I'm not talking about a straight line down. So any of those comments of people saying it's too early, yes, I understand it can be too early, but we are investors and traders, and we need to have some sort of signals that we use to start to determine the short term, the medium term, and the long term, so that we can make decisions ahead of the market. Essentially, when we're speculating, we're not waiting on the news to tell us what's happening next. We have to start to research and use our tools to give us the insight to what we believe is happening next based on probabilities, so we can take those trades and make a profit from the market. If we sit around waiting for the news to tell us what's happening next, we miss out on the profits. That's essentially what happens. So the macro is still in play here. It is a lower swing top. And if we break that 109, that then confirms the downtrend, lower swing tops, lower swing bottoms. As I said, this is the Gann swing indicator. Link to this if you're interested is in the top of the video description. So dollar is down. That has then led to more pump ups on the stock markets, S&P, Nasdaq, all up. The main thing I want to focus on here is the potential of the trap. So the targets we are now looking for, as we've said before, between 38 and 42, we can now hone this into a more specific number of around 3,900 points, because that is the 50%, the halfway point between the low and the top in August. So look for closes and consolidations above 3,900 points for the S&P. This could potentially be the macro low. I am not calling it 100%, but there is a lot of good looking indicators here. Now, the next piece, which would be the macro side of things, looking towards December for the S&P, is a move up to around the 13th, 14th, 15th at least of December. We need to get to that point, plus around 700 points from the low. So the low to around 700 points, you can see, is over 4,200, and it's got to be after the middle of December. So that would then give us an overbalance in price and time, meaning that the money, the smart money, what the chart is telling us is that we are seeing more buyers come into the market to support the price for a longer period of time, pushing it up higher than what we have seen in any of the previous moves to the downside. And this is a specific range that I'm measuring right here. So these are the signals that tell us earlier on than the rest of the market, because sure, we'll get a pump up, news will be maybe a little bit good here, but there'll still be a lot of people fretting, and then we start to get the reversal because we have to. You know, you pump up, get the reversal to test some higher prices, right? So maybe put in a higher low, which is a positive sign, but the news will be telling you that everything is really, really bad. We've got collapses, banks going down, falls in property prices. The show's over yet again. But if you get support level come in above the previous low, so probably from around 3,600 to anywhere in this zone. This is months down the track. That's going to be your signal to know that the news is talking shit. Everyone else is talking shit. They can't read a chart. And if you get a higher low, the market's telling you that people are buying this at a higher price than what they were previously, which is a bullish sign. So let's look at that in the months to come. That is the more macro play here. For now, the short term on the S&P, let's see if we can get a close above 3,900 and then break the logarithmic downtrend here and get close to the linear as well. You know, this is the bear market downtrend above all these previous tops. Looking towards December, that's what we're going for there. Short-term stuff, signs are looking okay for now. Need to get above 39. Same sort of analysis here for the Nasdaq. You can see the move is quite similar. We're coming up to some significant resistance levels here, the 50% at 11,768 and 12,080, which is top to the current low. We got that test almost dead on cue here, and then it bounced away from it. Guys, I'm not trying to gloat or anything, but Gann was an absolute genius, and I strongly suggest doing some research into Gann if you are new to trading and you want to learn about charts. Gann, to me, Gann is the man. Moving on with the Nasdaq analysis, this is the range that I'm focusing on from the October 13th low, about 2,700 points up and about 61 days, the same as the S&P, except obviously the numbers to the upside are higher. So let's take a look at a measured move here on the Nasdaq. 2,700 points sets us out somewhere around 13,200. And it's a good price cluster to get. You can see we had previous lows come into the market as support, bounce away, a little bit of support before it broke down, tried it again, broke down, retest to the underside, and a failure. So consolidating above this level in a macro sense, probably in the next couple of months, if we can get there in December, that's the 60 days that it took to go low to high. Past that point, past mid-December, that's going to be a good sign for the Nasdaq as well to start to claw back some of these losses. Now, if it does get to that point and reverse, same deal. You want to see a higher low come in above the previous low. So that's at 10,440. Ideally, you want to see it above these levels, which the market is forming at 11,000 points. A reminder about our exclusive trading workshop, which you can find a link to in the video description down below. Now, this will help you improve your current trading plans. You'll need to sign up with the Bybit and BitGet links in our video description. So if you already have an account with these particular links, you're already one step ahead. But if you have it with someone else's link, you'll need to use those particular links down below and create a new account. So submit your interest using the Google form in the top of the video description, and we'll see you over there. Here's your second reminder to like and subscribe with the bell notification icon, and you'll have videos popping up on your left-hand side to go back and review these videos. I know they're a few days old, but these have the details in the analysis of how I got to this point, figuring out the charts. So have a look at those next, and I'll see you back here at the next video. Reminder to get some sun while the sun is out here in Southeast Queensland. Until then, peace out.